Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel Accounting Buddy NB. In today's lesson, we will explain how assets lose value over time and why recognizing this loss is vital for accurate financial reporting. It begins with descriptive questions that explore meaning, need, and various methods of calculating depreciation. Through short answer questions, learners strengthen their conceptual clarity and understand key accounting treatments and adjustments. The inclusion of MCQs help test comprehension, analytical thinking, and practical application. Together, this lesson build a complete understanding of depreciation from theory to real life practice. So sit back, relax, and watch the full video. In this section, we will take few descriptive type of questions and answers. Question number 1 is, do you agree that depreciation is a permanent, continuing and gradual reduction in the book value of a fixed asset? And the answer is yes, depreciation is permanent, continuing and gradual shrinkage in the book value of a fixed asset. Question number 2 is, if depreciation reduces profits and value of fixed assets, and thus the capital of the owner, why do businesses charge depreciation? And the answer is depreciation is a cost of doing a business. If depreciation is not charged, both profit and fixed assets would be stated at inflated amounts, and thus the financial statements will not show the true and fair view of the financial performance and also the financial position of the business. Question number 3 is, depreciation is a cash expenditure like any other normal business expense. Comment. The answer is depreciation is a non-cash expenditure because there is no involvement of cash outflow. Question number 4 on your screen says, Tully Trading LLC has not used machine number 9 during the year. The accountant still charged depreciation on the machine. Is he correct? And the answer is yes, the accountant is correct in charging the depreciation on machine number 9 because an asset not only depreciates due to its use, it also depreciates because of efflux of time. Question number 5 is, depreciation cannot be provided in case of loss in a financial year. Comment. The answer is depreciation is the cost of doing business, and like any other business expense, it is charged against the profit and therefore has to be provided whether there is a profit or loss in a financial year. Question number 6 is, which method of depreciation assumes that an asset should be depreciated more in the earlier years and less in the later years of use? And the answer is diminishing method of depreciation, or the written down value method of depreciation, assumes that the asset should be depreciated more in the earlier years and less in the later years of use. Question number 7 is, two companies purchase identical machinery for $200,000. One uses SLM and the other WDV. After 4 years, which company will show higher book value of assets? Why? And the answer is the company using SLM will show higher book value because depreciation is evenly spread, whereas WDV charges higher depreciation earlier, reducing the book value faster. Question number 8 is, if a company frequently changes its depreciation method to influence profits, how would you as an auditor evaluate its financial reporting? And the answer is frequent changes reduce comparability and may indicate earning manipulation unless justified by a change in circumstances, for example, asset usage pattern. Such changes should not be allowed. Auditor must ensure compliance and accounting standards and ensure disclosure. Question number 9. Compare the impact of charging depreciation versus not charging depreciation on financial statements. And the answer is, with the depreciation, profits reflect true costs, assets shows realistic value, reserves are maintained for replacement. Without depreciation, profits are overstated, assets appear overstated, risk of capital erosion arises as funds may be distributed without provisioning for asset replacement.
Question number 10 is a factory's machinery is depreciated using WDV at 20%. The machinery was bought for $500,000. After 3 years, management wants to sell it, calculate its book value and discuss how depreciation impacted the selling decision. And the answer is year 1 book value will be equal to 500,000, which is the actual cost of the machinery less 20% depreciation on it. Therefore, the book value at the end of year 1 will be 400,000. Book value for year 2 will be equal to 400,000 minus 20% depreciation on 400,000. Therefore, the book value at the end of year 2 will be $320,000. Now the book value for year 3 will be equal to the WDV of 320,000 minus 20% depreciation on $320,000, which comes to $256,000. Now if the market value is less than 256,000, selling results into the loss, and if the market value is more than 256,000, the selling will result into the profit. Depreciation reduces the carrying value of the asset, therefore affecting the profit or loss on its disposal. Question number 11 is define depreciation, and the answer is depreciation is a reduction in the book value of the fixed asset due to wear and tear or efflux of time or due to obsolescence. Question number 12 is explain the term accumulated depreciation, and the answer is it is the amount of depreciation already charged as expense from the date of purchase of the fixed asset till the last day of the current financial year or up to the date of sale of the fixed asset, and is credited to the provision for depreciation account and not credited to the fixed asset account. Question number 13. What is the book value or the written down value of a fixed asset? And the answer is it is a part of the cost of a fixed asset which has not yet been depreciated. The book value of an asset is its cost when it is purchased, and therefore it is the cost less accumulated depreciation. Question number 14 is give two causes of depreciation, and the answer is the two causes of depreciation are use of asset and obsolescence. Question number 15 is why is depreciation charged? And the answer is it ensures that the expense of using an asset is matched with the revenue it generates and prevents overstatement of assets values in the balance sheet. Question number 16 is land depreciated? The answer is no, land is not depreciated because it generally has an unlimited useful life and does not lose value through usage like other assets. Question number 17 is what type of expense is depreciation? And the answer is depreciation is a non-cash expense that reduces reported profit but does not involve actual cash outflow during the year. Question number 18 is what are the two main methods of depreciation? And the answer is the straight line method charges equal expense each year, while the written down value method applies a fixed rate on reducing balance. Question number 19 is under SLM, how is depreciation calculated? And the answer is depreciation is calculated by dividing the depreciable cost equally over the useful life of the asset, and depreciable cost is equal to the cost of the asset less its residual value. Question number 20 is under SLM, how is depreciation calculated? And the answer is a fixed percentage is charged on the asset's book value at the beginning of each year, resulting in higher depreciation in earlier years. Question number 21 is which method shows higher depreciation in initial years? And the answer is the written down value method, as it applies depreciation on the reducing balance, leading to heavier charges at the start. Question number 22 is where is depreciation shown in the financial statements? And the answer is it is shown as an expense in the profit and loss account while accumulated depreciation is deducted from the asset value in the balance sheet. Question number 23 is, what is residual value? And the answer is, residual value is the estimated amount expected from the disposal of an asset at the end of its useful life after full usage. Question number 24 is, can depreciation rates differ across assets? And the answer is yes, because different assets have different useful life, usage patterns and prescribed rates under company law or tax laws. Question number 25 is, what is the accounting entry for depreciation? And the answer is debit depreciation expense in the profit and loss account and credit accumulated depreciation account to reduce the assets book value. Question number 26 is depreciation mandatory under accounting standards? And the answer is yes, as per accounting principles, depreciation must be provided to ensure that assets are not overstated and profits are realistic. Question number 27 is, mention two objectives of providing depreciation. And the answer is to ascertain the correct profit or loss and to show the fixed assets at the correct value. Question number 28 is, what are the factors involved in providing depreciation? And the answer is, factors involved in providing depreciation are cost of the asset, estimated residual value of the asset at the end of its useful life, and the estimated effective life of the asset. Question number 29 is, what is depreciable cost? And the answer is, depreciable cost is equal to the cost of the asset minus its residual value. Question number 30 is, how depreciation is different from depletion? And the answer is, depreciation is gradual decline in the book value of the tangible fixed assets, while the depletion is the gradual decline in the value of the wasting assets such as coal mines. Question number 31 is, how depreciation is different from amortization? And the answer is, depreciation means writing off the value of the tangible fixed asset such as plant and machinery, building, etc., while amortization means writing off the value of the intangible assets such as patents, etc. Question number 32 is, give the formula to calculate the annual depreciation as per straight line method. And the answer is, annual depreciation under straight line method will be equal to the cost of the asset less its estimated scrap value and the net value divided by the expected useful life in years. Question number 33 is, what do you mean by the asset disposal account? And the answer is, when a fixed asset is sold, a separate account under the name asset disposal account is opened. The cost of the asset and also the provision for depreciation related to the asset to be sold is transferred to this account. Sales proceeds are also credited to this account and the profit or loss on sale of fixed asset is determined. Question number 34 is, what is the impact of VAT paid at the time of purchase of machinery on depreciation? And the answer is, VAT paid does not have an impact on depreciation since VAT paid is not a cost of the asset. It is set off against the VAT collected. In this section, we will take a few multiple choice questions. Question number 35 is, depreciation is charged because the available options are option A to maintain cash balance, option B to reduce liabilities, option C to show assets at current market value, and option D to allocate cost of asset over useful life. And the correct option is option D. Depreciation is allocation of asset cost over its useful life. Question number 36 is, which of the following assets is not depreciated? And the available options are option A building, option B furniture, option C land, and option D machinery. And the correct option is option C land. Land has an indefinite life, so no depreciation is charged. Question number 37 is, Which depreciation method charges equal expense each year? And the available options are option A, WDV, option B, SLM, option C, units of production, and option D, sum of digits. And the correct option is option B, SLM method. SLM spreads equal depreciation annually. Question number 38 is depreciation is classified as, and the available options are option A, cash expense, option B, non-cash expense, option C, liability, and option D, asset. And the correct answer is option B, non-cash expense. It reduces profits, but it does not involve cash outflow. Question number 39 is which factor does not affect the depreciation? And the available options are option A, cost of asset, option B, residual value, option C, useful life, and option D, office rent. And the correct answer is option D, office rent. Office rent is unrelated. Depreciation depends on the cost of the asset, its life, and the scrap value. Question number 40 is under WDV method, depreciation, and the available options are option A is equal every year, option B reduces year after year, option C increases year after year, and option D remains same. And the correct option is option B, it reduces year after year. WDV charges depreciation on reducing balance, so it decreases annually.
In my next lesson on 14th February 2026, it will cover a comprehensive set of multiple choice questions and true or false statements designed to test conceptual clarity and practical topics, which includes meaning and purpose of depreciation, methods of calculating depreciation, difference between depreciation, depletion and amortization, accounting treatment, journal entries and adjustments, effect of change in method and residual value, asset disposal and replacement accounting. This interactive question and answer helps students strengthen their grasp on both theory and application of depreciation principles, ensuring a strong foundation for financial accounting.
If you enjoy the content of my channel and appreciate my teaching style, please subscribe, share and like my YouTube channel @Accounting Buddy NB. Thank you and goodbye for now.